lawmakers internationally, complex ESG regulatory requirements, high interconnectivities across different markets, across different regions. In the EU alone, there are 20 different regulatory frameworks being affected. What's the impact on a financial institution? Well, it's significant across banks, investment firms, asset managers, insurance companies, and exchanges. All financial products and services are front to back impact in terms of sales, portfolio management, product development, reporting, risk management, corporate disclosure. It is hitting everything. And sometimes I feel like an amateur therapist when people ring me and say, what does this definition mean? What's the taxonomy? What's it going to mean for my business? And how do I integrate this into what we're trying to do? Next slide, please. How do we frame sustainable finance? I think Ashisha did a really good job of this. It's around regulations, investors, capital markets, customer segments, and technology. What are the levers in the system? Obviously, good science based on data, the price, risks, and return, well-designed regulation and incentive structure, so we can see what the EU is trying to do in a moment, and I'll get to that shortly. Balance sheets, trust, and political will. There are some of the key levers in the system, and obviously driven by consumer demand as well, which we can see pre-COVID. There was a lot globally in terms of climate action, and I think coming out of COVID, it's not just about the environmental aspects now, it's also around the social aspects, in particular around healthcare, and so we're really seeing a broadening of that ESG agenda and the SDGs. What are we trying to achieve at a macro level? Fundamentally, we are trying to get capital to scale up and to invest in a more meaningful way in the tens of trillions into the climate action agenda. So we need to reallocate that capital. We need to reprice it in terms of ensuring that if you invest in green, the capital is cheaper. If you invest in brown, the capital is more expensive. As Ashisha said, it's a longer term outlook to scale new technologies, renewable energy, hydro, green building, smart water, business models and behaviours, correction of market failures and promotion of green growth trajectories. And then the key thing, I keep coming back to it, and forgive me for sounding like a broken record, but how do we achieve greater leverage of public finance to engage and deploy private capital? The amounts of capital required for this agenda are so vast. As I said, no one government alone can finance their own national decarbonisation efforts, so they need to crowd in private capital. And what we're seeing across the world is that governments are raising capital through green bonds, deploying that capital kind of the first 10, 15, 20%, and then trying to crowd in private capital behind that. And obviously we need to address the financing gap in developing countries. Or if we look at your region, as Ashisha said, it's quite significant. It is 3.4 trillion over the next decade, just under 20 billion for you guys alone. So where is that capital coming from? And I imagine a lot of it is from the private sector. So that's how we kind of frame the sustainable finance agenda, if that's okay. Next slide, please. I just use the EU as an example, and this is the upcoming initiatives and regulation coming out of the European Commission, or the ongoing regulation. So I like this phrase that I picked up from one of the consultancy firms, that the green regulatory tsunami is fundamentally changing the financial services industry. And if you actually look there, the yellow balls are just upcoming initiatives, and those, I think it's almost pinkish, are sustainable finance regulation. And you can see the sustainable finance regulation is actually more than just the business as usual in the European Commission. So what the European Commission is trying to do, and this is DG FISMA, so it's kind of like the Ministry of Finance. It's not DG Climate, it's not DG Environment. So the finance guys, the Capital Market Union in the European Commission, they're driving this whole agenda right now. And as you can see from there, if you're in the European Union and the capital markets, you are looking at what's coming out of the Commission in the coming years, and the majority of it is actually now focused on sustainable finance. So you as a company are trying to figure out what does that actually mean for your company across banking, insurance, securities, asset management. When is it going to come in? The timeline's out to 2022 in terms of the regulation. And what do you need to do now, between now and then, to make sure that your company and what you do from a product perspective, ESG perspective, is fully integrated into what you do, or you will get left behind in what the Commission is trying to do. And you, perhaps as a financial services company, may be a stranded company yourself in the coming years. So the key thing here is to look at this and say, this is not the environment or the climate guys in the department in the European Union. This is the capital market people in the European Union are the ones implementing all these new regulations and directives in sustainable finance, because they fundamentally look at it and say this is a significant risk for the capital markets if they do not integrate ESG. And then on the far side, the capital required is so significant, we need to get these companies to develop new products and services to scale up and invest in the trillions. And the overall amount in Europe alone is over 2.5 trillion over the next decade. So again, Europe needs to get the capital markets moving in quite a significant way and accelerate that. Next slide, please. Just in terms of go ahead, next slide. Thank you. And just in terms of the value chain, in terms of the regulatory agenda and sustainable finance, so you can see from the slide before, I'm just staying with the EU again from a global perspective. The regulatory, it's compulsory, it's coming on board. You are seeing a lot of banks, for example, the new principles of responsible banking is responding to this. Banks are now obviously, having to integrate the ESG into what they do at the board level. And then obviously at the product level. So there's two things hitting, say, financial institutions, in this case banks. And what we're seeing is those leading banks, this is usually championed by the chairperson and the CEO. There's usually a subcommittee of the board on this topic. It is trying to go across all aspects of the banking institution itself. And then on the product side, given some of the things, for example, renewable energy, just as an easier example, what are the type of products that the bank has in place to deploy capital to renewable energy players, obviously in their jurisdiction or across, in this case, Europe. So what we're seeing is that a lot of the institutions are looking at what's happening regulatory. They are doing an assessment on the regulatory impact, the strategic and regulatory impact assessment on their business. So what does this actually mean, for example, in terms of the EU stuff? They are then obviously looking at that from, well, this is the impact going to be on us. Let's develop our strategy, or if we already have one, how do we update it? So this is across products and services, operating model, scenario analysis, and cultural change programs. And the scenario analysis one is quite interesting. Pre-COVID, we were seeing the Bank of England had instructed all the major banks in the UK to start doing climate change risk assessments. They have been put on hold while the banks deal with COVID, but they will come back into force next year. And that's kind of the first time that at a regulatory level, we are seeing a regulator turn around to banks, in this case, and say, look, you now need to start looking at your book. You now need to start looking at your book through the lens of climate change and climate risk. And this will flush out a lot of those assets that perhaps may become stranded assets in the coming years. And before they do become stranded assets and damage the balance sheets of these banks, they now need to be dealt with that in a more meaningful way. So following the strategic development, you get the transformation process design of your institution, all these value prop design, frameworks, product, service, and advisory. And then you get into implementation, you execute that, and then performance management. So this is just more so this value chain of what we're seeing from the larger institutions in Europe, in this case, that are looking at what the Commission is doing at a regulatory level. They are assessing what it means for their business. Once they understand that, developing a strategy. Within that strategy, usually building out a team and resourcing a team to look after that. The transformation of the entity, financial services sector entity to deal with this, and then executing that, and then obviously reviewing where they are, and normally done this through transparency and reporting. TCFD is a big one. Benchmarking against their own KPIs, or in this case, getting involved with things like the sustainable banking principles. Calculation of impact in terms of their own business. Digitalization is a massive thing at the moment. Data management, training, and we come to that in a moment. But what you can see here quite simply, and obviously these slides we shared afterwards, is this is the type of value chain or journey that these entities are on as they try and deal with, in this case, what's coming out of the European Commission. Next slide, please. So what does this mean in a COVID world, which we're all living through? So I think the whole sustainable finance agenda globally had picked up a lot of steam, in particular in the last 18 to 24 months pre-COVID. It was obviously built on the back of a decade-long bull market. The markets were doing well. And then the concern was when COVID hit, similar to 2008 financial crisis, when climate action was shuffled to the side as we try to save the financial sector itself. Would the same happen to green and sustainable finance? Would the interest drop off as we obviously try to rebuild? And that was a concern at the beginning of the COVID tragedy. But I think what we're now seeing is, and as we still try and integrate sustainable finance into recovery, is we are seeing a lot more interest in utilizing this time to finance that green recovery. And as somebody said to me recently, the difference between the 2008 financial crisis and the crisis we're living through now is that the 2008 financial crisis was one of within the financial sector itself. What we're living through right now is a physical shock, a physical crisis. And this is what climate change is also going to be like. And as some of the over 1,000 climate events in your own region in the last 20 odd years shows that the increasing number of climate change shocks. And so what we're now seeing is sustainable finance being built into COVID-19 recovery plans. Next slide, please. Next slide, please. It's not moving. Okay, thank you. So just in terms of the need for green recovery, if I may just quickly run through this. So we've seen that the crisis has underscored the link between human activity and multiple crises we are facing: biodiversity loss, which is already mentioned, soil erosion, human activity, climate change, environmental degradation. And up until now, and this makes complete sense in the tragedy that we have been living through, government stimulus packages and recovery efforts have been focused on keeping jobs maintained and health and safety of their populations. And now, as we move into the next phase, we are seeing at a limited level governments around the world start to put green at the heart of the recovery efforts. Not all are doing that, but as we move into the third phase, we hope to see more. But I think what we have, as I said, up until recently, governments are focused on emergency plans, which makes complete sense. And in recovery phase, we are now seeing the kind of shift to a green recovery. And it's trying to also now look at the consequences of climate change and to benefit from the economic and job opportunities that climate change brings. And so I suppose the key thing there, going back to some of the earlier comments today, is, we can look at climate change and say, okay, this is a disaster, the making which it is. And we can then try and bring together the private actors, and in this case, private capital as well, to look at it and try and figure out how can we finance it. But as I said the other day, this is not about philanthropy. This is not about corporate social responsibility. This is about using the power and the might of the capital markets to finance activities that will actually give a return as well. And, it is about economic opportunity at the heart of it as well. Next slide, please. Again, so evidence of green stimulus to pivot post-COVID is mixed. So I think you can see the ones above zero. In Canada, we are seeing a lot happen in terms of the next phase of recovery with green linked to that. France, no surprise given their leadership on the Paris Agreement. UK is kind of mixed in the middle. Italy, recovery smaller but is green. Where we can see China, a large part of their recovery is not green. There's a small part there. Indonesia, there's no green there. India, no green. South Korea, there's a lot happening there, but this will be into the next phase. So what this slide is also showing is that there are X number of countries that are putting green within the recovery, the second phase out of COVID. Majority aren't. But as we track it, what we're seeing is that the next wave, a lot of the green activities are coming through. So I expect to see this slide in 6 months' time. Most of the countries will actually be on the flip side, 0+ up in terms of green, as they work towards maybe the third and fourth phase of stimulus. Next slide, please. I'll be very quick at this, the EU Green Deal. So again, the EU is really leading on this. As I said earlier on, €1 trillion has been deployed. That was agreed last week. And what we have is a renewed sustainable finance strategy within the EU. And what they're basically saying, the boxes at the bottom, is a more sustainable financial system means economies inside has to be more resilient towards climate and environmental risks. The crisis introduces a window of opportunity as a necessity to accelerate the work at EU level. And then the role of sustainable finance within that is that it provides instruments that can be used to align public and private finance towards a green recovery. And again, even the EU itself is recognizing that it collectively can only, mobilize X% of the capital required and it needs the private sector to assist and to build on that activity. Next slide, please. In Asia, in South Korea, we're seeing that they are committed to making the economy make their economy in a cleaner, greener way. Their new Green Deal, substantial investment in renewable energy, a carbon tax introduction, and the phasing out of domestic and overseas coal financing. And they'll also establish a regional energy transition centre to support workers as they transition to jobs in more sustainable sectors. So that just transition agenda, there will be winners and there will be losers. And how can you support the companies that are now more fossil fuel or carbon emitting, and how can you help them transition? Next slide, please. You can go through on to the next slide, please. So next slide, please. So in terms of conclusion to today and the opportunity to speak to you, which I'm very grateful for, we did a paper. We were the first international network to do a paper on the COVID impact on sustainable finance, which is great. And I suppose the key takeaways for us, and just going through my slide, and as you saw from Ashisha earlier on, our world is interconnected. You know, we're all living in this one planet. Here I am today in Ireland, where I'm in lockdown. I'm talking to you guys in Sri Lanka about sustainable finance. So this is a global agenda. Resilience is a priority. If anything, what COVID has showed us is that we need to build resilience more into our economies and societies. That is going to cost money. The economic recovery, presents opportunities, also risks, but the opportunities are significant. And so if you're in the financial sector, capital markets now, how can you deploy your capital in an ESG perspective? And on what type of technology or activity can you deploy that capital into, and how can you scale up? Financial innovation is driving change. I think that innovation, we're seeing smaller startups and fintech, AI come in and maybe disrupt the larger financial institutions, but also we're seeing at a regulatory level those changes being brought to bear and how the capital markets are reacting to that, and it is driving change. And then obviously we've got to prepare for future shocks. Next slide, please. And just to kind of wrap up in terms of, this is my second last slide, this is a great narrative. As I said, the next 15 years is going to be about sustainable finance. There's a lot happening, but there are challenges within the sustainable finance agenda. And while we recognise and we hope that sustainable finance will be the heart of post-COVID-19 recovery efforts, there is an urgent need to scale up sustainable finance efforts. Again, keep coming back to the figure for your region, 3.4 trillion, 18.4 billion for Sri Lanka alone. Challenges to scale up this amount of capital do exist. And first and foremost is a lack of talent. And this is a global lack of talent. Generally speaking, the sustainable finance pool of talent globally is quite a small one still. And while you have some amazing people working in this, the challenge right now with all the different regulations and policies being made in this area, that there isn't enough talent or awareness of the climate agenda and what that means from a financial institution perspective within financial institutions right now. So there is a war for talent going on in terms of people who are experts in sustainable finance. I am watching all the big firms globally are building out rapidly green and sustainable finance teams. Again, they're either hiring new people or trying to promote internally. There's a lot happening in training from academic institutions to other institutions. But the talent piece right now is one of the biggest challenges facing the sustainable finance agenda. We need to accelerate the upskilling of people in financial services. We need to accelerate the upskilling of people in the regulators and policymakers as well, so that we're all on the same page as we look at this agenda. And so that's ongoing. We're seeing it in a lot of our members, Abu Dhabi, Luxembourg, Dublin. We are seeing it across our members in Africa, other members in Asia, a significant focus on the talent agenda. Ireland alone has just announced recently it's put $1 million into a 2-year program to support private sector companies to upskill their staff on the ESG agenda. Luxembourg has just created a new kind of lab to assist companies to upskill as well. Abu Dhabi just launched a certificate in sustainable finance in January this year for financial service professionals. The City of London has done the same. Hong Kong is doing something similar. And so there's a lot happening within our members on the talent side, which is great to see. Poor data is a second point, and this is already mentioned. We get again, part of this is around the talent perspective. If the people who should know what they're trying to do from the talent are not there, the data will not be best used. And then on the flip side, the data coming out of the real economy is not as good as it should be. So again, a big focus we're seeing among our members, Toronto, Mexico, others, Shanghai, Shenzhen are focusing on the whole data side and to make sure that the data that has been delivered is credible, is robust, and then that can be used in investment decisions. This obviously talent and poor data then impacts on the innovation product development side. So again, if you don't have the people who know what they're talking about as a financial institution, how are you going to develop the products that are required to allow you to stay ahead of the game, to integrate ESG into what you do and develop new products and services to deploy capital at scale? Linked, the data and poor data piece is linked to innovation and product development. Again, we're seeing a lot of our members, if not the majority of members, are focused on these top three points because they want to scale up capital, but without talent, they can't do it. With poor data, that again is the second challenge. They can't develop new products. So, it doesn't sound exciting, but the whole talent agenda is a key focus of a lot of our FC4S members as they try and build out their financial centres in sustainable finance. The next point is too many initiatives on the private sector side. So there's phenomenal initiatives like the Principle of Sustainable Banking, the Principle of Sustainable Insurance, but there's a lot of other initiatives floating around, and there is confusion in the private sector about which initiative to sign up to. Majority of them are not standard backed. So, I was with one major European bank recently and they realized they'd signed up to over 40 different initiatives, which was taking 7 staff full time just to deal with and report with. So they were slimming that back. But that's something we're seeing from the private sector. We need to see at a global level policy and regulatory convergence. So we are going back, interconnected world. So what happens in the European Union may have impact in your region in terms of financial services, in particular around taxonomy. As China is developing its own taxonomy, Indonesia is looking at that, Europe is looking at that, Canada is looking at that. How can we try and bring some regulatory convergence to this agenda? And then that all leads to a pipeline. There's no shortage of capital to invest in this side. There is a shortage of projects to invest in at a global level, and that's something we're also seeing. Next and last slide, please. So look, as we conclude, I hope, and that was quite a quick run through, sustainable finance is a key topic for the next 15 years. COVID-19 is a stark reminder about resilience and how we need to strengthen resilience of our societies. Decisions made now under the current circumstances will shape the real economy and financial ecosystem for many years down the road. Moving ahead with the sustainable finance agenda provides significant opportunities. And I think what we're talking about here is also competitive advantage and to mobilise private capital and support recovery and growth. There is a sense of urgency now to get it right and to use this time to figure this out properly. But the key focus now is on overcoming the challenges holding back the sustainable finance agenda, as per my previous slide. So in bringing it all together, FC4S is continuing to grow and continuing to add new members. You have seen how we assist our members assess where they are, how we help them set priorities, build capacity, catalyse innovation. We're delighted to be having this call with you as a Sri Lankan financial sector, public and private community. And I think my last point is, with nearly 80% of our members now public-private sector initiatives, there is what we're seeing as best practice at a global level within financial centres is that it is a public-private platform that's established to figure out where you are at in terms of sustainable finance and set priorities and begin action. And we will be delighted to support Sri Lankan activities going forward. Thank you very much.
Thank you so much, Stephen. Since we are running out of time for Q&A, what we'll do is we'll have Q&A coming up for you at the end. And we will right now move on to our panel discussion. Let me introduce Dr. Nandalal Veerasinghe, who will be our next panelist. Dr. Veerasinghe has served Central Bank since as a Deputy Governor since September 2011. And he's currently supervising the Departments of Economic Research, Statistics, International Operations, Domestic Operations, Macroprudential Service Surveillance, and other functions, including the Sustainable Finance Committee. Since we don't have much time, I will request Dr. Veerasinghe to take over and make his presentation.
Thank you. Thank you, Aditya. Can you please put my presentation on?
Yes, we'll do.
While the presentation is being uploaded, let me start briefly. I think Stephen made a very comprehensive presentation that made my remarks much easier. So he covered a lot of areas, especially globally and on a lot of technical areas. I think I will be focusing only on what we basically from the central bank point of view, what we are doing from the central bank side, and especially focusing on the roadmap and way forward and the challenges. Can you please move the slides, please? I think these. I briefly just mentioned the role of central banks, and Stephen presentation, he made it very clear, especially in the EU European Commission work. Those are very much related to central bank objectives. This is why we are also getting involved in this process as a regulator, and also we are trying to promote in terms of our key objectives. One is economic and price stability, other one is financial system stability from the central bank side. So we think the both objectives with climate related actions are also connected, associated, mainly through the kind of risk that the industry or these objectives are going to see. Mainly, first one is physical risk, second one is transition risk, and the liability risk. So those are going to affect overall our key objectives of the financial system stability and as well as economic and price stability. Next slide, please. Now, just let me move on to the current status of sustainable finance initiatives in Sri Lanka. We have made satisfactory progress towards taking steps to achieve sustainable goal. As mentioned in the UNESCAP, we are on the road to development. Sri Lanka provides an interesting case study. As Sri Lanka has been incorporating sustainable development goals into its national policy framework. Actually, there are national policy frameworks. There are three. Those are the ones on national point of view. First one is enacting Sustainable Development Act in 2017. Then we have established a Sustainable Development Council, and then we appointed a Parliament Select Committee on Sustainable Development. That's from the national level. From the central bank side, we have taken steps to move towards sustainability in the financial sector. That's where we have considered sustainability as one of the core principles for the finance sector. And in fact, we 2016, we joined the IFC supported sustainable banking network. That's where we brought in all the stakeholders under this network, and also have linked with IFC and other central banks. And also we were able to unveil or launch our roadmap for sustainable finance in 2019 as part of this initiative. I think that this is one of the key kind of events that that we took the leadership. And the let me just briefly next slide, please. Some of the key points that I would like to highlight on the sustainable finance roadmap that we have launched. I think one can go through it and see there's a very detailed timeline for short-term, medium-term, and long-term timelines to achieve several objectives. And there are about 6 pillars, as Stephen also touched on all these things. In our roadmap, we have financing vision 2030. Then ESG integration into financial markets is the second pillar. Then financial inclusion is one of the important part. The lack of financial inclusion is one of the key weakness that we see in Sri Lanka. And obviously capacity building is there are a lot of challenges, as Stephen already mentioned. We're also trying to build our capacity both in the central bank as well as in the financial sector, banks, insurance, and capital markets. That's where we are also collaborating with a lot of other international agencies to build our capacities. That's one of the areas that we need to build more. Then obviously international cooperation, like what we have been working with UNESCAP, BioFin, and this kind of initiatives. And also the other key challenge and one key pillars is the measurement and reporting. I think that's where we need to build up our capacity. Those are the key pillars in our roadmap. Slide, please. And in terms of progress, I think there are a lot of challenges and the plan. So basically, let me briefly focus on two slides, that is way forward and challenges. So going forward, we would focus on developing necessary frameworks to help the markets and the financial institutions to adopt good practices in delivering sustainable finance. In this context, it's required to focus on some important aspects. So first one is it is necessary that high-level commitment of the government is ensured to complement sustainable finance practices on an ongoing basis. That's where we are working with the government from the central bank side. Actually, we have presented several proposals to the government as well from our side. It is also encouraging that we have the Sustainable Development Council in Sri Lanka, which is aiming at consistently facilitate, monitor, and review the development of Sri Lanka's sustainable growth. That's on the national side. And also there's a greater scope for policymakers and regulators to commence with formalizing some of the building blocks of our sustainable finance system. While the current frameworks and strategies are ambitious and expected to deliver results in the long run, immediate actions are in fact necessary to ensure implementation of the measures and targeting sustainability. So one of the other issues that we are facing basically is the lack of clear definitions of green and social projects, make it difficult, as Sivan also made this point, make it difficult for banks, institutional investors and other key stakeholders to identify eligible sustainable projects and then allocate capital towards these projects while measuring sustainable stocks, flows and performance. Therefore, it's very important that an applicable taxonomy is developed to support that identification of sustainable, suitable activities of the projects. That's where I think in this context, it may be best to develop taxonomy considering the issues that are unique to Sri Lanka. I think Stephen mentioned that there are countries are developing their own taxonomy. We are also in the process of developing a customized taxonomy applicable to Sri Lanka. We have a committee appointed that is chaired by me with the stakeholders. We are working on that. One of the objectives of sustainable finance is mitigation of the effects of climate change and post-disaster recovery needs. Therefore, there's a need to mobilize capital for the undeserved and unbanked section of communities. As mentioned, financial inclusion can be a catalyst in promoting sustainability. At the CBSL Central Bank, through the Regional Development Department, we have a department focusing on regional development. A number of credit schemes and credit guarantee schemes, even with the post-COVID-19, they have introduced credit guarantee schemes which are available for micro SMEs, are now trending towards a focus on sustainability aspect as we are promoting, even with these initiatives, encouraging them to focus on sustainable aspect of the projects. Similarly, it is required that financial institutions and markets focusing on inclusive green finance. This is a new and evolving area in many markets. It is inclusive green finance. I think Stephen also touched in this area as well. However, there are many challenges and obstacles in successful implementation of sustainable green finance initiatives. These include, first one, absence of a common definition of sustainable green finance and lack of international standards, absence of regulatory and legal frameworks directly related to sustainable green finance, poor project selections and management, information asymmetry in the markets, lack of analytical tools, and expertise in identification and assessment of risks. In case of Sri Lanka, these challenges are applicable and such challenges affect the successful implementation of sustainable green finance practices, and there's a timely need to address such issues. So there are basically the issues are lack of appropriate regular legal framework requiring need for developing new regulations. Lack of funding is one of the, as already we mentioned, there's huge need for financing, but finance needs are there, but we are not able to find sufficient financing. And obviously the other one, as mentioned, that lack of talents, lack of capacity, particularly implementation of analytical tools and expertise in identification and assessment of the risks and opportunities of sustainable green projects. And the last one, the heavy concentration of the banking sector, requiring a collaboration amongst key stakeholders to drive innovation in other industries, markets such as capital markets to create green products. So in Sri Lanka situation, I think as the SCA Banking Association representatives are here, bank sector are well ahead of beyond the other sectors in terms of developing and promoting sustainable the financing projects. But we need to support other sectors as well, and we have to share the experience of banking sector with others, and we have to go together with all the stakeholders towards this objective. Finally, the last point that I make is the transformation of the financial system would be a locomotive in promoting sustainable finance practices, and therefore it needs to be complemented with enabling regulatory frameworks that we are working on, adequate incentives. Obviously, there has to be some incentives, and appropriate pricing reforms. So proper pricing reforms should also be in place to ensure implementation of these policies and strategies for a sustainable economy. A collaborative model with all the stakeholders needs to be adopted in our financial and banking systems. Let me stop here, and I'm happy to take questions during Q&A session. Thank you.
Thank you, Dr. Veerasinghe. Now I will call upon Mr. Dimantha Seneviratne. Dimantha Seneviratne is the chairperson of Sri Lanka Banks Association. Due to lack of time, could I ask Dimantha to take over and make his presentation? I'm uploading your presentation right now. Dimantha? Hello, Dimantha? Faintly, I think your volume is a bit low. We can't hear you clearly though. Still, we are having issues with the volume. So while we wait for Mr. Seneviratne to solve the... Hello, Dimantha, we can't hear you. Sorry, I'm unable to hear you. If you put a earphone, Dimantha, it might work for you if you put a earphone. So what we will do is till Dimantha comes online, could I then maybe perhaps ask Nishanta from the Colombo Stock Exchange to take over? Nishanta is the head of research and strategy at Colombo Stock Exchange, and he is not with me now. So he's. I'll get Nishanta online. Is Nishanta here? Can you hear me?
Yes.
All right, Nishanta. Yes. So we will have Dimantha coming in later, but we'll have you present on the Colombo Stock Exchange. All right. Slides are being loaded. Give me one moment.
All right. So very good morning to everybody. First of all, I must thank the Sri Lanka Bank Association for giving the opportunity for Colombo Stock Exchange so that I can bring the...
Nishanta, your volume, your microphone went mute.
Hello, can you hear me now?
Now we can hear you, yes.
All right, very good morning to everybody. And first of all, I must thank the Sri Lanka Banks Association for giving the opportunity to Colombo Stock Exchange so that I can bring the capital market perspective to the discussion. And the sustainability is all about the mitigating environmental, social, and governance impact. Now, how can the listed companies measure the mitigate? Of course, then they need to measure. Then how do other stakeholders know that they do measure? Of course, then the reporting matters. Let's have a look at how the reporting trends of the Sri Lankan listed companies. Shall we move to the next slide? Now, as you can see, in 2018, there had been 143 companies altogether reporting or preparing sustainability reports, either depending on GRI standard or some other standard, whereas that was 114 in the previous year, reporting 20%, 25% increase. And it's worth noting that because this is happening in an environment where this is not mandatory, this is completely on voluntary basis. And shall we move to the next slide? All right. Now, the stock exchange will play a pivotal role in terms of promoting sustainability in any country, especially with regard to listed space. And this is what we did actually. And we joined the Sustainable Stock Exchange Initiative in 2015. It's the apex body of stock exchanges that have publicly demonstrated their commitments towards promoting sustainability. And we joined in 2015 as the 15th member. And now it has 96 member countries. And so we published a voluntary guideline in 2018, titling Communicating Sustainability, the 6 recommendations for listed companies, which can be downloaded from our website free of charge. And one other thing that we can do is, of course, we can do the capacity building, and with a view to providing the training workshop for listed companies. And we partnered with Global Reporting Initiative in 2018, as you can see. So we have been providing training programs, training workshops for listed companies. Actually, we started in 2018 April, and even we conducted one training workshop during this month. And shall we move to the next slide? Right. So as far as stock exchange is concerned, what can a stock exchange do to promote sustainability? This is in general, in generic sense, of course. There's a long list of actions, but I put them into 4 different broader buckets so that we can discuss them in very high level terms. Of course, what we can do is we can promote sustainability and related products and services, and we can do capacity building. And of course, we can strengthen the environmental disclosure, and finally stimulate the sustainability dialogue. Now, if I go a bit inside each of these buckets, and promoting sustainability is concerned, of course, we can offer different products, developing and offering products and services for the market, so that the investors are able to invest in those products. Examples would be the green bonds, green REITs, and sustainability REITs and sustainability ETFs and so on. And one other area that we can engage in is, as a stock exchange, creating visibility so that the stock exchange can make green products easily, so that we can enable investors to easily find green products through dedicated platforms or the trading labels or listing labels. And so this is something that is getting popular. And 34 of Sustainability Stock Exchange Initiative member stock exchanges have implemented these kind of dedicated trading boards. And finally, we can do something called provide guidance to demystify the clarity on green terminology. This was mentioned a couple of times earlier also about the taxonomy. So this is also something that stock exchange can do. As far as the second theme, the capacity building is concerned, of course, we can educate issuers and investors the importance of incorporating ESG concerns in their investment decision making. And that's something that we can do. And also we can set standards, incorporate environmental disclosure standards to listing rules. And that's also something become very popular. Out of SSC, the Sustainable Stock Exchange Initiative exchanges, 24 exchanges out of 96 have made them mandatory. They have included ESG disclosures into their listing rules. Under capacity building, of course, one other area that we can engage in is the providing benchmarks, making benchmarks available for markets too, in the form of green indices, ESG indices, sustainability indices, and so on. And if I maybe talk about the sustainable index it's not a new thing. I mean, it's yet another stock index. However, it would be slightly different from traditional stock index. In the traditional stock index, of course, we have traditional size, liquidity criteria. But in this kind of ESG index, of course, in addition to those criteria, we have something called ESG score. So we are assigning a ESG score for each company based on their public disclosure. So that on top of others, they have ESG score, which will have its own threshold, so that we would pick the best 20 or 25 companies, which will, in turn will become the index constituent companies. And so this is also a very popular area. Now more and more stock exchanges are showcasing their companies through ESG indices. That would have been perhaps the best way to showcase, encourage companies to adapt more and more sustainability reporting activities. And as far as strengthening the environmental disclosure is concerned, of course, one thing that we could do is providing written guidance, which we have already done in Sri Lankan context, and offering training programs. And last but not the least, the leading by example. Right? So we're asking others to prepare sustainability reports. Why not us? So that leading by example, producing their own environmental policies and practices into the annual reports, right? And as far as the last action is concerned, stimulating the sustainability dialogue. Of course, stock exchange can have its own roadmap to grow green finance or sustainability finance in a particular market. And finally, the simulating investor issuer dialogue, so that it can facilitate dialogue between issuers and investors on green finance. For example, end of last year, United Nations Principle for Responsible Investment, UNPRI, had 3,000 signatories whose total asset under management comes to 100 trillion. This large chunk of money is available only to be invested in ESG conscious stocks. So that in order to tap that, we can stimulate dialogue between issuers and the investors. And so these are the things that that a stock exchange can do in general. And so if we go to the next slide, please. Now, as far as promoting sustainability is concerned, it's not without challenges for stock exchanges. And the good thing is, of course, these challenges have already been faced by some other stock exchange, so that the stock exchanges are not supposed to or not meant to meet these challenges in isolation. That's why it is important to have a membership of an apex body like Sustainability Stock Exchange Initiative or the World Federation of Stock Exchanges Sustainability Working Group, so that we are in a better position in order to, as far as the experience or lessons learned sharing is concerned. And in very brief terms, these were mentioned in the other previous presentations as well. And insufficient supply to meet investor demands. In the recent past, we saw most of green finance, green bonds were oversubscribed in certain markets. There is an insufficient supply to meet investor demands. And however, in some other markets we see insufficient liquidity. And of course, this was mentioned in the third one is terminology confusion. Of course, there is no standardized definition or clarity in terms of green and related terms such as low carbon. And so these kind of things will bring some hesitation for investors to consider the green labeled the products and the operational capacity constraint for stock exchanges. And that's what that was explained as the lack of talent, right? And the regulatory hurdle, of course, in certain new green products may require involvement of capital market regulators, defined the listing requirements and the other enabling the regulations, right? So that also can be considered as a sort of the challenge or the barrier. And of course, lack of transparency and the availability of data. because the sufficient data must be available for investors and other asset managers to make decisions. And so this also can be considered as a sort of barrier, the lack of available data. And in conclusion, what we need is actually for us to proceed creating ESG indices and creating dedicated listing boards. So we need more and more companies reporting or preparing quality reports. Then only we would be in a position to come up with the best set of companies that can be included as index constituents for such an index. Therefore, we are in the process of developing or improving, helping companies develop their the reporting quality. That's why, as I mentioned earlier, so we have been offering training programs, and through training programs and the voluntary guidelines, so we are in the process of helping companies develop or enhance their reporting quality. So this is what I wanted to share in my short presentation. And over to you, Adisha.
Thank you, Nishant. Those are very useful comments for us to know about what's happening in the stock exchange. I think Dimantha Senaratne is back online, so I will bring up his slide deck right now. Dimantha, are you here?
Yes, can you hear me now?
Yes, we can hear you now.
Okay, great. Sorry about that technical glitch. Thank you very much for inviting SLBA for this webinar. Actually, SLBA comprised of 30 banks, 24 licensed commercial banks, and 6 licensed specialized banks. So of them, so far, 21 of the banks have signed up with the Sustainable Banking Initiative. Now, if I may take you through the slides, as earlier Dr. Nandalal, Senior Deputy Governor, mentioned, banks are a bit ahead of this game, and that is thanks to in 2015, 18 banks signed up with the Sustainable Banking Principles, which was proposed and supported by 4 DFIs, FMO, DEG, OEC, and Propaco. And thanks to that, we all agreed on 11 sustainable banking principles, and which are listed there. First of all, it's on the environment and social risk management, how we as a team, how we can ensure that each credit that we evaluate, all these banks have sustainable banking officers assigned, and also ensure that through the credit risk management framework, whenever a new credit or a project is evaluated, the impact on the social and environmental side is assessed, and we clear them before a credit is approved. So like that, there are certain standards that we maintain, and especially on the second one, environmental and social footprint, our own carbon emission, or the trying to help preventing these areas, some of those that we have initiatives that we have taken. So like that, 11 initiatives taken, and in between 2015 to 2019, we have been working very closely with the banks to come up with a sustainability implementation guide. We also launched a website and also local case studies and an e-learning platform, which was launched in December 2019. So initially it was 18 members, as I said, but subsequently we had a membership drive and managed to increase it up to 21 banks. 9 banks who are not part of that actually are mainly the foreign banks, because they have their own head office sustainability principles that they go by, and which are either equal or higher than what we follow. So that is why they are not signed up with this, but of course they ensure that these sustainability standards are maintained. And because of these initiatives, SLBA was also awarded by CFI company last year for the best sustainable banking initiative in South Asia. That award was given. So the 21 banks who have signed up represent roughly about 90% of the total banking asset base. If you take, Rajesh, if you can move to the next slide, the last slide. So from phase, now the phase 3 is that basically from now onward to 2019 onwards, what we are going to do. So that's where we need to get the collaboration among the membership to develop these new sustainable financing products and proposition. Especially the cooperation is needed, and there's sustainable officers who are, I mean, again, the coordination is very important. So we are looking forward to something like right now the Compliance Officers Association is there, Chief Risk Officers Association is there. So like that, if the sustainable officers also can get together and share their ideas, that would be a key element that we would like to, and then probably take this to the non-bank financial institutions as well, as Senior Deputy Governor mentioned. I think taking to the other institutions is important. So we are quite happy to work closely with the non-bank financial institutions as well to share our understanding, even our e-learning platform. That's something that we can work together. And then also to unlock the sustainable investments in terms of agri-financing, etc. The full rollout of e-learning platform is another thing that we are working very closely, and also pursuing these international cooperation. So that's where even this webinar and also the tie-up with this FC4S, etc. are going to help us. Trying to strategize so that we can be part of the initiative supporting the Colombo International Financial Center as a sustainable finance hub in South Asia. So that's where the collaboration is important. Central Bank is quite ahead of the game, as shared by Senior Deputy Governor. So is the Colombo Stock Exchange. So you would like to work closely with all these parties to get that whole industry move towards a sustainable financing side. So these are the key 2 slides. Given the time constraints, we will move later on, join in on the question and answer session.
Thank you, Dimantha. Now let me move on to our next speaker, Mr. Manjula De Silva, who is the Secretary General of Sri Lanka Chamber of Commerce. Mr. De Silva, are you online?
Yes, Adisha, thanks. And good afternoon, everyone. So I will start off with the premise that if Sri Lanka is to become a hub for sustainable finance, I feel first of all it must become an attractive destination for sustainable investment. That is how you can draw the attention of the global players in sustainable finance to Sri Lanka. So that I see as a kind of a first step, and then we can work towards becoming a hub for the South Asian region. So if you look at the real sector of the economy, there are a number of sectors which I believe can qualify for sustainable investment going forward. Now, if you look at, for instance, the apparel sector, they have done quite a bit of work with regard to ethical work practices under the banner of Garments Without Guilt, which was launched by the JAF. And so they have won quite a bit of international recognition for their efforts. If you take the tea plantation sector, similarly, most of the companies have now become members of the Ethical Tea Partnership and are now working towards certification by the Rainforest Alliance, actually, which is subject to a lot of stringent audits on a regular basis, where they go into depth on areas like the worker welfare, worker health and safety, working conditions. A lot of this is gone into before such certification is awarded. So there are organizations which are really making an effort to improve their sustainability practices. Again, if you look at the handloom and organic food sectors, many of them have received fair trade certification, which really looks at the entire supply chain. If you look at the waste and circular economy, there are companies like BPPL, which has gone into recycling of plastic waste to manufacture brush filaments and even yarn more recently. So which is 100% green business, basically where you're making use of the PET bottles which are thrown to productive use back again and into a significantly growing export industry. So there are areas like that. And then once again, from the government side, government has recently announced an accelerated drive towards renewable energy, where they have set a very ambitious target of sourcing 80% of Sri Lanka's energy needs from renewable sources by 2030. And definitely that will lead to a lot of investment into the renewable energy sector. So these I see as many potential areas for sustainable investment, which should draw the attention of the sustainable financing community. If you talk about the Ceylon Chamber's actions to promote sustainability, the Ceylon Chamber of Commerce has always been in the forefront of driving the sustainability agenda. And in fact, for 17 years running, we have been conducting the annual Best Corporate Citizen Awards for Sustainability. We have just launched the 2020 edition of that. And also we have promoted certain interesting concepts such as the concept of extended producer responsibility for the treatment or disposal of post-consumer products. So what you mean by this, what's called EPR, is that you put the responsibility on the producer to ensure that after consumption, the waste is recalled. The plastics, for example, like companies like Coca-Cola, with whom we work closely, are taking responsibility to get the plastic bottles collected back to them, and then they channel it to the recyclers like BPPL. So this is something we are working closely with the Ministry of Environment, and certainly, again, an important aspect of sustainability. We are also working on the SME side. We have recently established the Center for SMEs, through which a lot of support is being given to the SME sector, again, which is important from a financial inclusion point of view. Another area actually going forward where I think we need to focus on is the area of social enterprise or social business. Once again, an area where there are specially designated impact investment funds who look for investing in such social enterprise. So an area that we need to work on to get the attention of these impact investment funds to Sri Lanka. Now, one issue that actually the local companies face, now if you see the companies which are significantly compliant in ESG factors, on the environmental, social and governance factors, now sometimes they face a competitive disadvantage in the market, especially in international markets, when you are competing with non-compliant companies and non-compliant countries who can offer that same product at a lower cost, because compliance with ESG has a cost. And so this is where sustainable financing has to come on favorable terms to balance that cost and level the playing field. So this is one area I think the financing and banking community need to address, because if not, the incentive to comply with ESG becomes weak, because if that is going to put you at a disadvantage against the others. I may also just touch on sustainable insurance. Having been in the insurance industry for a good part of my career, I was asked to cover that as well. So it's if you talk about sustainable insurance, the same principles of ESG are being applied to every step of the insurance value chain. And there are 4 principles of sustainable insurance, which are here. I will not go into detail, but they relate to areas like decision making, the raising of awareness, promoting widespread action, and also with regard to regular disclosure. Now, when you talk about sustainable insurance, the main focus is on climate risk insurance typically, and making such climate risk management solutions more accessible and affordable to the poor low-income households, as well as the farmers and the MSME sector, micro, small and medium enterprise sector, to manage and respond better to climate change and natural disasters. So that is where the current focus of sustainable insurance is. So there are actually both public and private sector insurance players have made some connect with the global operators in sustainable insurance. For example, we have this Insure Resilience Solutions Fund, which is funded by KfW, which is a significant source of sustainable finance into the insurance market. And in fact, recently a project to provide technical assistance to the National Natural Disaster Insurance Scheme, which was actually led by an international organization called the Insurance Development Forum, was selected as one of the first projects to be approved by the Insure Resilience Solutions Fund, and that is actually currently pending government approval to proceed. And another application which the Ceylon Chamber is currently working on is with the UNEP DTU partnership. So that's a partnership between UNEP and a Danish university called DTU. And there are actually, we have got Sanasa Insurance Group also engaged. This is to develop affordable resilience insurance for MSMEs in Sri Lanka. So that's the primary focus, so that we will try to help the insurance industry to come up with innovative climate risk solutions that are, again, more affordable and accessible to the MSME sector through this project. So that's on the sustainable insurance side. And if I move to the next slide, again, coming back to the chamber, last year we launched our Sri Lanka Economic Acceleration Framework 2020-25. So there also we gave a lot of focus to social inclusiveness as well as sustainability. Those were identified as two key points. And there are many recommendations relating in particular to financial inclusion, which is an essential component of the sustainability equation contained in that document. So I will not go into a lot of detail on that again, since we are a little behind time, but I would like to close my comments with a proposition to Dr. Nandalal to consider, because we have seen that in many other parts of the world, many organizations as well as countries have come up with what are called COVID bonds, which are considered within the social bond category, which is also broadly falling within the sustainable finance market. And these COVID bonds have helped to raise finance for relief measures arising out of the COVID-19 crisis, such as providing support for SMEs, as well as investment into healthcare infrastructure and so on. And I have put down here a list of organizations and countries which have so far issued COVID bonds. So maybe an area perhaps our central bank can also look at, because this may be a way of maybe raising finance at a relatively lower cost than, say, a plain vanilla bond, because this will attract the attention of the sustainability finance community, who probably may like to support investment in a bond of this nature. So with that thought, I would like to conclude and would like to thank SLBA for giving me this opportunity. Over to you, Adish.
Thank you, Mr. Silva. We've got about 15 minutes left for Q&A. So let me invite my co-moderators, Kiran and Dileepa, to lead the questions. May I also remind all the participants that you can raise questions on the chat function, which is shown. So please share as many questions on the chat function. And if you do not raise your question in time, please, there's a function called raise your hand. So click on that and we'll then see that you want to ask a question. So Kiran, could I ask you then to take over the moderation on questions?
Yes. Thank you very much, Adisha. I'm going to dive straight in, given time. We have two questions that have come forth specifically to banks. I'd like to direct those questions to both Dimantha Seniviratna, but also perhaps our regulator who's also present may like to also chip in. So we have a nice general question which has come from Pakistan, because this is a regional hub idea, and I think it's very appropriate that we have regional participants. How can banks generate demand for sustainable finance in developing countries given low stakeholder awareness? So I was just wondering whether the SLBA and the central bank could just, use the experience of Sri Lanka perhaps to look at it from a regional perspective. of encouraging others. Simanta, you'll have to put on your mute button. Yeah.
Dr. Nandlal, you want to go first?
Yeah, I think just briefly, this is important that the stakeholder awareness and the capacity building is important pillar of this agenda. I think if you look at Sri Lankan situation, I think in terms of achieving sustainable goals, I think we are basically well ahead in the region and in the emerging markets as well in terms of our agenda on broad sustainable goals. And we have a fairly good kind of awareness within the country. And also, as we mentioned earlier, there are certain initiatives by all stakeholders, firstly the government, from the government side, and then from the central bank as a regulator, and then from the business side, from the banking association, and as we see right now, CSC, the insurance regulator, and the markets. So I think that's where the way to go ahead, and still I think we see, I mean, in my opinion, there's a lot of I mean, there's a long way to go in terms of stakeholder awareness. It's only among the kind of a key business and regulators, but general in terms of sustainable finance, general awareness and the available instruments are basically still we have to develop. That's where I think we need some support from especially international agencies and some of the countries that have made much better progress. For example, in the region, if you look at Indonesia, I think we have been working with Indonesia quite closely with the regulator and others. They had a lot of good work. I think this is where we are thinking to get closer and get more collaboration with markets that has done much progress, and also those are basically suitable and appropriate for Sri Lankan situation. And that's where broadly that would be my response. And if you want to share about the banking sector, what you can do, I think that's good. Thank
you. Okay. Yes, I think even Sri Lanka were quite behind the game, and but I think one advantage that we had was a long-established Sri Lanka Bank Association, and that's where banks have been very closely working. All the bank CEOs are members of this, and that has helped us to embrace this initiative quite well. And that is where we got guidance also from the 4 DFIs I mentioned earlier to set it up. And then also there was a hand-holding period as well where they gave some little bit of funding as well through SLBA to ensure that this is embedded, and also they're developing the website and also the e-learning platform. So those are the learnings that probably we can also share with the even in Pakistan if they want to get some help. I mean, SLBA can liaise and then give some advice how we initially involved in setting this up and how we inculcated that habit, and then thereafter now initiatives like these and trying to take it through to the next level of getting the other financial ecosystem also a part of that, and then the Chamber of Commerce, the stock exchange and all. So trying to get everybody in here. So we can share some of our examples with this specific to address this particular question.
Thank you, Dimantha. Kiran, I think there are two questions from the audience. Could I ask Ranga to take up, please speak and provide your question, please, Ranga?
Right. Thanks, Adisha. Thanks. I hope I'm audible clearly.
Yes, you can be heard.
Yeah, my question is like I'm working on climate finance for a long time, and climate finance is something that readily available, and the systems have been developed over the last 15 years globally, and a lot of countries have taken the opportunity to tap into climate finance so that they can channel it to sustainable investments. But what I see is there's a bit of a lack of coordination or lack of interest among the investors in the private sector. Is anybody would like to give a comment on that? Has this the opportunity not?
Ranga, your mic is muted, so we couldn't hear the last part of your question.
Sorry. No, I just want to get a comment. What might be the reason for that? Is it lack of capacity or lack of interest or lack of coordination, or are there any bottlenecks to tap into these readily available resources? Thank you.
Thank you, Ranga. Would any of the panelists want to take up that question?
Probably I'll take about. I think it's mainly the lack of awareness about availability of these funding and maybe taking that also to the market. Like the DFIs have been here, and then also people like IFC and all. They have been dealing with the financial institution that they are working with. But probably it has not gone to a broader level of institutions to understand there are opportunities. There's a set of investors who are willing to invest in sustainable financing, green bonds, etc. Maybe lack of awareness is the key one. And if you can get that up, I'm sure there'll be a lot of interest. And also the quantifying the savings, the carbon emission savings and all those, whether the data, I mean, that was one challenge that came up also in the presentations. Data clarity is another issue, I believe. Why it has not been a big success, but those who are involved, those banks and the financial institutions who have been working with, I think they have made some good headway in securing some good funding lines from these sustainable financing initiatives.
Thank you. I'm just going to refer to that second bank question that we had earlier on, because it's a very nitty-gritty question. When different banks are at different points in their sustainable finance journey, they may have implemented environmental and social management systems at different stages. And therefore, certain banks may have a higher benchmark of ESMS standards than others. And this is a common issue for all countries. But what you might have is a bank that rejects or refuses a proposal based on ESMS grounds, but another bank with a lower level of compliance may actually pick it up and fund it. How do you deal with questions like that in markets which are, beginning to implement some of these compliance issues? How do we actually manage this situation, and how do we create a level playing field? Can I just have Mr. Senivaratna speaking on this, and perhaps also Mr. Veerasinghe, Dr. Veerasinghe?
I mean, that's a practical challenge that because different banks, financial institutions have different standards. So one may not finance due to the sustainability issues, and then somebody else might pick it up. So that's where even in 11 principle, the last principle is no race to the bottom line. But when somebody is racing towards getting the bottom line up, sometimes you might miss it. So it's part of our 11 principles. But one thing that if we can share the awareness of the importance of these framework having implemented it, now that's where the DFIs or the funding line that we are getting also plays a key role. Now these funding lines are coming at a relatively cheaper rates, and if the financial institutions are also aware that the need for such a control mechanism, which these DFIs are also very keen to ensure, then probably they'll think twice. having this implemented framework is working well. Probably I think these were, even Stephen also can share his input here, because I'm sure this may be a challenge most of the countries are faced with. Would like to hear from Stephen as well, but it's a practical challenge. Another area that I would suggest is that maybe now, since we have sustainability banking officers with all the banks that we have tied up with, maybe a coordination between them, where all these credits are initially vetted by the credit risk unit, and that's where the ESM framework is checked at, and maybe a close tie-up, something that I was earlier proposing, also similar to the Compliance Association or Risk CRO Association. Maybe sustainability officers can also coordinate closely, then they would also share these things among the financial institutions. It's not only the bottom line. I think the sustainability is an important element, and then how best the industry work together and get that. I think that more coordination, more communication is also important. Would like to hear from Stephen as well for his input after Dr. Nandalal's input.
Yeah, I think what I can add, basically, I think I agree with what Dimantha mentioned. Is in a competitive business environment, when you have voluntary principles, obviously, it may not be a perfect level playing field when you select projects. I think the way to handle going forward, I think, as Stephen mentioned in his presentation, the kind of standard guidelines and regulations by regulators at some point, as European Commission now they are developing this kind of thing, then it would give some more clarity in terms of what are the standards that they are expected to follow, and then everyone will be on the same page. I think that's, as far as from the regulator's point of view, that part I think I can see going forward, but we are not at that stage yet in Sri Lanka. I'm sure this is a common problem in all the markets. I think Stephen, if you can contribute the other experience in other countries, would be useful for us.
Yes, Stephen, we'd love to hear from you on others' experience.
Sure. Can you hear me okay?
Yeah.
Yes.
Yeah, great. Thank you. I suppose the key thing there is, as the doctor just said, a lot of what we're still talking about is voluntary. And we're now seeing a shift to mandatory, and that's where we're going. That's where the travel is going, and the Commission and others are doing that. So that's one of the key takeaways. The second one is, and while we talk about this agenda, green finance, climate finance, ESG, and while it has been around for a while, it is in particular the last 24 months that we've seen a real shift in thinking from the capital markets and more resources being put in to this initiative. And Sri Lanka was ahead of this thinking, actually, if you look at your roadmap and the dates and the times that was developed. So the key thing to remember is that the majority of firms, the majority of financial centres around the world, are only really beginning the journey in this agenda. And while there are, fantastic examples of best practices and best in class, they are still actually quite limited, because if you think about it as a large bank and you look at the bank and percent of its market in whatever market that may be, Sri Lanka or wherever the country it may be in, these are conservative institutions, and rightly so, and same with insurance firms. They're very well regulated. So any type of shift in terms of scaling up, deploying capital has to be well thought out. And I think if you look at the European Union perspective, and somebody said this to me recently, I thought was a fantastic example, is that large financial institutions are effectively being asked in terms of a regulatory perspective to scale up and deploy new products and services to push more capital out the door and support this agenda. However, they are going to need a period of 2 to 3 years where they effectively internally develop out these new products and services, develop the awareness, develop the skills, understand that regulatory environment. So it can't just happen overnight. And I suppose we'd be worried about it if it happened overnight, because again, there's such large financial institutions. Within my slide, I did a piece on the sustainable finance value chain and how you tackle it's slide 13. And again, I start with the regulatory, compulsory and recommended. As an institution, strategic and regulatory impact assessment, strategy development, so on and so forth, including product development, value prop. If you were to strip out the whole climate agenda right now as a financial institution, this is you looking at a new opportunity, a new space. How would you go about, getting into that opportunity, getting into that space? If it's regulatory driven, if it's market driven, if it's consumer driven, how would you go about developing products and services? So that value chain is there. And then just to close off in terms of examples, we don't run the Principles of Sustainable Banking or Principles of Sustainable Insurance. My colleagues in Finance Initiative do. But from my perspective, the companies that are really leading on this, it's starting at the C-suite, it's starting with the chairperson and the CEO and the board. And those companies that I'm seeing that are out there in terms of really trying to integrate this into the firms usually place a chief sustainability officer in the office of the CEO. And so the rest of the employees know that this is coming from the CEO down. And then secondly, they're also quite open and they will make mistakes. So as I said, there's an openness to share. There's a willingness to be transparent on what's going on in this agenda. But fundamentally, to recap, everybody is starting this journey. There are others obviously further ahead, but in the mainstream is really now beginning to move. So the opportunity Sri Lanka has right now in the region, and obviously for its own economy, is A, how do you crowd in private, domestic and international capital to decarbonize Sri Lanka? And then B, how does Sri Lanka position itself as a hub for the region? And when you bring that together, you recognize that other jurisdictions are only starting now, so you're not late to the party. And a big part of this, as has been mentioned by my fellow panel members, is talent. And if Sri Lanka can get ahead of the talent agenda, you are in a very strong position to lead on this from a regional perspective. And sorry, I hope that makes sense. You can email me directly afterwards if you want me to follow up.
Thank you. I think go ahead. That's a good comprehensive answer. Thank you.
Thanks very much, Stephen. Can I call upon Dennis to raise a question? His hand is raised.
Yes, thank you very much. I hope you can hear me. Yeah, my name is Dennis. I work for SLBA Trust and actually have a similar question than the one that Ranga asked. So we are actually implementing at the moment a project under the Intra Resilience Global Partnership in Sri Lanka and with another local partner. And the project is on establishing multi-actor partnerships on climate and disaster risk, finance and insurance. So we are very interested to bring all the different stakeholders together on this. And my question would basically be, how can we enhance coordination on this? How can we bring everyone to one table? There are a lot of initiatives going on in private sector, public sector, many of which have been mentioned, the Banks Association, Chamber of Commerce, Central Bank, they are all interested in working on this. So my question would be, and it has been partially answered already, how can we get everyone to one table and what would be the best way to reach out and coordinate efforts? Thank you.
Yeah,
Go ahead.
I think in terms of coordination, obviously, I think this is one of the weakness in our framework where we have number of institutions. If you look at national level, I think as much sustainable development go, this council, there are several, there are ministries, there are several departments. But when it comes to sustainable financing initiatives, I think I can say the central bank, we have this committee. Basically, we can coordinate with all the stakeholders like banking association, then CSC, the insurance regulator, and the markets, and the CC as well. So basically, thing is that our mandate is basically limited to an extent of sustainable finance agenda. So if that is anything related to sustainable financing, then we obviously are happy to coordinate with relevant stakeholders and support those kind of initiatives. But if something going beyond, I think this has to be sustainable, whatever the council by the government, then they are supposed to coordinate with all the government agencies and the stakeholders. But that is not, as far as I understand, it's not very active so far. I think some of the capacity constraints and all things like that. Hopefully that will probably be addressed going forward. And then one national level coordination is basically is necessary, that we understand. But I think that it will make some progress. I think right now, anything relating to I mean, we can coordinate from central bank side with other stakeholders on the financing side.
Thank you very much. I would then maybe reach out to you after this webinar because we are going to have a workshop focused on the financial and insurance side of this. We already had some on the risk management side, where, for example, Dr. Yalgama from the Sustainable Development Council was also speaking.
Right.
I'll reach out to you after the webinar. Thank you very much.
Thank you. And one more thing to add, if there's anything about capacity building, we certainly can collaborate. Also, we have Center for Banking Studies, which is focusing on capacity building in the financial sector, together with banking association as well as mentioned in the presentation. So we are happy to collaborate in capacity building. Certainly, I think we are very happy to support that kind of initiatives from Central Bank.
Thank you very much. I'm going to ask Uchitha to give one question, please. We have very little time, but if you could please ask one question, please.
Thank you. I will forward it to Dr. Veerasinghe. I have typed in as well. First of all, on the CBSL financing SDG Sustainable Development Roadmap, what I want to know is how it has been mainstreamed into the national policy frameworks, and has it been accepted as the overarching financing for SDG strategy of Sri Lanka, and what is the progress based on that towards ensuring policy coherence in the front of financing for SDGs?
I think I don't think our initiative is kind of as a regulator, and as I mentioned earlier, I think national level, that basically it has to come from the national level, asking us to be part of that overall strategy. That has not happened yet. I think if you look at from our objective and mandate point of view, I think that is beyond our mandate. So that's why we are limiting ourselves only to as a regulator of one of the financial sector, and we are taking the leadership and trying to coordinate the other financial sector regulators and the markets. But anything beyond that, we don't have a mandate. In fact, I think we can be taken into a overall national this thing by the government. So that leadership will have to come from the national level, from the government, or from the Ministry or Sustainable Council or somewhere else. It's not that we are only a subset of the national this thing. We are not the leaders. We can't spearhead the operation because we don't have mandate.
Thank you very much, Dr. Veerasinghe. One last question for Stephen. How can countries take advantage of being part of a South Asian hub to finance their SDG needs? A general question looking at the regional perspective. One last response.
Thank you, sir. I missed the first half of that question.
How can countries in South Asia look at having playing a part in this regional hub in Colombo in terms of achieving their SDGs and the financing needs?
Sure. Well, I think at a minimum, it's all about how you measure the impact, right? And so as our colleague in the stock exchange said earlier on, that measurement part is the key. What are the frameworks that you're putting in place initially? Do you design your own framework on a regional basis? Do you adopt international standards? Do you have a mixture of both? But I think fundamentally, going back to the opening part of this webinar, 3.4 trillion is required over the next decade or so. And so as we're talking at a regional level, we could see from now, it was a study from 2017, so it may need to be updated or is in the process of being updated, but it did point to what each country needed. It broke it down per sector. So that's the starting point. And then, collectively, can you bring together that grouping or a percentage of that grouping? Therefore, how much is required across that say 6-7 countries, whatever it may be. And then what's the framework you're going to put in place to measure the impact in terms of the finance flow to SDGs? What is the impact of those projects? And that's the way I would see I would do it. But I would adopt or develop a hybrid of a standard that's already out in the marketplace. I wouldn't develop a separate one, because I think that's one of the challenges right now. There's too many floating around at the moment. And from an investor's perspective, you'd rather be able to look at apples for apples rather than apples and oranges. You'd rather have something similar that you can actually gauge impact and, in terms of your capital impact and measurement of progress. So again, I may not have answered that specifically, but that's what it's fundamentally coming down to, right?
Yes. Thank you very much, Stephen. The impact point is well noted. Adisha, I think over to you.
Thank you, Kiran, and thank you to all the speakers and the panelists for your input. I think there were recurring themes that came up in our discussions. The need for integration, the need for capacity building, and actually beyond the financial sector to also include the other sectors in the real economy and the academia as well. One of the objectives of today's webinar was to bring as many stakeholders together to have an understanding of what is happening globally, what is happening at a regional level, and how each of the sectors and the actors in sustainable finance in Sri Lanka, what is their current work stream, and where do they hope to collaborate in the future. I think one of the key outcomes from today's discussion is that all the actors are willing to collaborate, and everybody wants to make a difference. So I think this webinar should not be an end in itself, but we should pursue all those efforts for collaboration. And I believe FC4S has offered the capacity as well in terms of helping Sri Lanka develop capacity to kind of attract and scale sustainable finance and deliver results for the region. So we hope that this will not be the end of the conversation. We are hoping to organize more stakeholder engagements and discussions via online mediums, especially on sustainable insurance, as well as how the banking sector and the insurance sector can work together. We are also at the moment working with the agriculture sector to find out how agri-sector lending can be enhanced by kind of mitigating the risk in that sector. So the Sri Lanka Banks Association's Sustainable Banking Initiative is open for collaboration with all parties, and we hope to work with the central bank, the stock exchange, and also FC4S and all the other actors on a joint collaboration. We will share part of this today's webinar recording with all of you, and we will also try to have a minute of today's outcomes circulated to you, and hope to keep all of you informed of future events as well. So thank you very much for your time, especially to the speakers and panelists for your valuable time today, and to all the participants, thank you very much. If you have any further questions, please feel free to share it with me via email, and we will have those questions sent over to the relevant speakers, and we will try to get back to you with answers. So thank you very much, and have a great afternoon and evening ahead. Thank you very much.
Great, thank you.
Thank you.
Thank you very much.